What's up, everybody? It's Jimmy with Trading Decoded. It is June 24th, 2024, 4:03 in the afternoon. Market is closed. This morning started off low volume, boring, and, not for the people who lack patience like myself. But we were able to squeeze out a couple of quick trades before the chart decided to move wonderfully to the upside. By then I had already taken two trades, and then I was able to take my third one during a time where the market actually started to move personally. And then we had a bunch of people wait until the bigger move, which was awesome. I wish I had the patience to do the same, but I don't. But that's because I think I've conditioned myself to try and be done as early in the day as possible. But nonetheless, we found some good trades up and down, and then the market flattened out. The volume started to drop again, and it becomes a lot more risky to trade. But let's go ahead and launch charts and see what we were looking at in pre-market. So our pre-market support resistance lines, it was basically a relatively tight range. I mean, you're talking, 70-cent range, 80 cents on these dark blue lines. The problem is not so much the range, it is the fact that you have, here, let me show you. The fact that you have gappy, tight, small candles all over the place, this is just indicative of very low volume. Trading options during low volume means less likely to follow through on a lot of the moves that we're looking for. It just, volatility is down, so contracts don't move very much. It's difficult to trade in a low volume environment. Now, we are trading SPY, which typically doesn't have volume issues, but you could see it when it's struggling with volume. Assuming that it was going to be a lower volume day, this is me talking here, I start to feel like if I'm going to take a trade, it's going to have to be potentially smaller moves, feel more aggressive, because of the lack of follow through that is likely to be the case, right? So each trade that we took prior to this move, which happened it just happened when the Qs and SPY started to sync up with each other, because Qs and SPY were not in lockstep with each other in the beginning portion of this morning, which makes trading even more difficult or uncomfortable. But these trades that we did take here were intended to be quick and intended to be bought at resistances both on SPY and Qs, and getting out when SPY and or Qs hit their next support down. So these here are not big trades. That one there was right around 14% return, depending on when you got in. We had a bunch of people get anywhere from 10 to 15% on that. And then this one here was a break below support. And then we were coming down to here. Now, this is when Qs were running into a level of support again. So again, this move here yielded, depending on when you got in, right around 16 to 19% return. Not a big return, but at the time, it felt like that's all we were going to get, at least for the time being. Now, volume did start to pick up, okay? And we did not get a candle close below our put line, so there was no reason to take puts at this point other than when we took them. And again, we did that because we had confluence between Qs and SPY. Now, ADD had already been and continued on an uptrend. So we knew that small caps at the time were being bought up while Qs were not. Hold on a second here. So the Qs were selling off today, and we got brief moments of moves to the upside, but we don't like to counter trend trade. So we want to wait for very specific things to take place. Now, for our Qs, we were waiting for the Qs if we wanted to take calls, because again, we were watching ADD today move up at the open aggressively. Okay, so we had some selling off and then it started to move up. Guys, that's buying. Buying is happening, but the Qs weren't following. So as we're watching the Qs sell off, I tell people, I don't know that I'd buy calls unless we can at least break the downtrend on the Qs and we clear above or at least a resistance. Make sure you're not buying calls at resistance on the Qs. So we got exactly that. The Qs broke their downtrend here at 952. SPY crossed over our call line at 951. So 952 could have been your entry here. Okay, now many of us didn't get in here. We waited for a break above. Now Qs were hitting another resistance here. That's why this is here. So if you took our call scenario, which was just a breach of this line, I mean, you got one hell of a payday. One hell of a payday. So if you missed that, we broke through resistance here, bought the pullback. ADD was moving up, Qs were trending up, ready, set, go. If you're playing line to line, in and out, if you're playing from here, Qs were running into their pink line, which is right here. Again, I happened to get out at this time because Qs were hitting the pink line, left a ton of money on the table. That trade right there ended up still giving me about 27.5%. Buying the pullback, which a bunch of us did, but a lot of people rode this thing up and continued to ride it up, which is awesome. Ended up being from this entry, 120+% return. And then people like to counter trend trade. Guys, at least wait for Qs to put in lower highs to show you that there's some weakness on the buying side or the sellers are getting stronger. We get our first lower high because people say to me, Jimmy, where would you buy puts again? Well, at 1014 on the Qs. Hang on one second, guys. Obviously, this is an important call because I am very sorry about that. Where were we? Oh, we were talking about taking a counter trend trade. Now at 1014, the Qs were coming off of a lower high, okay? And we had just talked about it here saying, Jimmy, when would you be interested in puts? I said, I would wait for the Qs to show signs of weakness. Now at this time, Qs put in a lower high up here. We tried to move up, couldn't. Sellers brought us lower. Tried to move up, couldn't. Push us lower. These are lower highs. The way I look at lower highs are bad for calls, number one. Doesn't mean you have to buy puts or you should buy puts. It just means maybe consider not buying calls off of a support line, because my belief is that if we're coming off of lower highs, we're likely to break support, not hold it. So that gives us the idea that maybe it's worth the risk to be aggressive on entries on puts if we're trying to catch a move to the downside during an uptrend, okay? That is why this entrance is here. But Jimmy, you're on support for SPY. I get it. We know that from this line, the next support down is here. So we'd be aiming for that, or for the Qs to get down to their next support line, whichever that might come first. But when we hit these lines of support in a counter trend trade, you're looking to take profits there and or at least move your stops to break even or in profit, so that if it holds support and bounces up, you get stopped out in profit, okay? But likewise, if you held on because the Qs continued to move down, you had the opportunity to get nice wins, right? So there were people that were still in this trade at this point we were looking for the pink line. That's what we were hoping for here. We were hoping for a break below this yellow line for a move down to the pink line. Stop loss would have been a candle close above this double top right here, none of which we got. Sketchy because it pulled back to it, held that same resistance that gave us the confidence to give it a try, held, and it did move down to the pink line and a little bit farther. Then we also had a trend line here, right? So when we were pulling back, we had a trend line saying, hey, if you're interested in buying puts here, Qs are now pulling up to resistance during a downtrend, SPYs at resistance during a downtrend. Entries for call or for puts here you go. Right down to as far as you want to go. You just got to keep an eye on the Qs, see what support lines you want to aim for. And as we hit them, we don't know which one's going to hold, which one's not. At this point, I would have suggested considering profits here, because the last time we touched this line on the Qs, we struggled to move lower. In fact, we didn't move lower. But at the same time, we were saying, guys, if the Qs are going to continue this downtrend, That would mean that we would have to put in a lower low while we're coming up from this lower high, which should push us through 477.29 and down to the next support. So this is what we're doing all day long, watching this stuff take place. Well, shortly after that, the market turned sideways. There was nothing to do here. Slow, grinding moves, and then I went to lunch right around 12 o'clock. So I missed the majority of this particular move down, came back shortly after 1, and picked up after the move. And again, Qs were breaking supports. ADD, I think at the time, started to roll off. Yeah, so ADD started to slowly sell off, giving us some opportunity to play to the downside. But each one of these lines was Qs breaking support and Qs getting down to another support. And that's pretty much it. There was not much else going on here until the close. But we don't trade this late in the day, or at least I don't. Congrats to anybody who did, who played any of this. I commend you for having elephant-sized testicles. Contracts are really cheap at the end of the day. They move really fast in your favor when you get a move like that. It's amazing to catch some of that. It's not personally my style of trading. I don't enjoy waiting here all day to take that kind of risk, even though the reward can be outstanding. If that thing pulls up even a fraction of that amount, all profits go away very quickly this late in the day. You know, your spreads get kind of crazy this late in the day. It's just not my cup of tea. But I know that there are people out there who crush trading late day like that, and for you guys, that's amazing. There's very few times that we'll have arrows and circles after 12 o'clock, simply because either nothing's happening or we're trading at a time of day that I just don't feel comfortable trading myself. So I don't try and help other people be comfortable doing something that I'm not. I'm not trying to be hypocritical here. And that's where, you know, we talk about discipline and all kinds of other trading problems, usually after I come back from lunch, because the chart is not beneficial, in my opinion, unless we're having a nice, clean moving day up or down. Later in the day, there's just too many levels of support and resistance for me to ignore, and which is exactly what I would have to do in order to take some of these trades. And I can't do that. So, but that's pretty much it. So the poll today is about 2-1 in our community, because this morning, I think some people got chopped up early, but then she opened up a bit and gave us nice moves up and down, and then sideways, then down, then sideways. So sideways is not a good time to trade options unless you're selling premium. But with that said, I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. Yeah, and that's pretty much it. So thank you guys for watching. Hope you had a fantastic day. Till tomorrow, I love you guys. See ya!